assist us for sharing? Kasi I'm not sure sa'yo kung meron kang button for sharing. Meron pala. Try to share lang.
Share sound. Tapos, saan ba dito ang i-click ko? Dito, entire screen? Sorry.
Pwede. Pwedeng entire screen kung gusto mo buong screen mo ang ipapakita mo or pwede rin yung kung ano lang ang i-share mo.
No. Ay, someone else is sharing daw eh. Okay. Sila na lang muna. Stop.
Joel has started sharing his screen.
Kay Joel to na, no? Yung nasa screen natin.
Sorry. Wrong sharing.
Siguro, Joel, you can stop sharing. Team naman nila Marie Cruz yung magpe-present ng part 2 tsaka 3. Introduce mo na lang sila.
Opo.
Good evening. Sorry, kagabi.
Opo, na-click ko lang, sorry. Good evening. Oh, sorry na-late po ako ng dating. Nag-start, naka-pray na po ba?
Hindi pa po. Kaka-open lang din itong Zoom.
Okay.
No worries.
Sige, let somebody lead the prayer.
Okay. May I call on Miss Miss Ethel to lead the prayer, please?
For a moment po. Father, the Son, Holy Spirit. Heavenly Father, we come before you today with grateful hearts. Thank you for giving us the gift of learning and the opportunity to gather, even through this online class. We ask for your wisdom and guidance, that our minds may be sharp and our hearts open to fully grasp and understand all the learning in bookkeeping. Bless our mentor who so generously shares knowledge with us without asking anything in return. May you reward his kindness with abundant blessings, strength, and joy. Lord, may this session be fruitful. May we learn skills that we can use to help others and to build a better future for ourselves and our families. Keep us focused, patient, and inspired as we study. We entrust this class to you. In Jesus' name we pray. Amen.
Amen. Alrighty. Alright. Sino ditong nag-struggle sa QBO o don't have a QBO for now? Kasi ako ganun din. Wala akong QBO.
Meron po akong QBO accountant. Na-try niyo po ba yung i-open? QBO
Yung sa
accountant.
training, na-try ko po yung i-open. Pero yung pag i-open ko na kasi yung training, yung sa training natin, wala na siya, nakablanko na siya. So, I think, what you call this, Anna? Can you...
Yes.
Can you try to share your screen before I'll introduce everybody?
Sige, try natin.
Or who presents? Yes, thank you.
Share sound. Entire screen. Bakit sa Zoom?
Kasi naka-entire screen ka.
Ano ba ang gawin ko?
Hindi. Yan, dyan. Yan. Click mo yan. Yan. Aba, naka-open ka nga. Totoo nga. Try mo sa pinakauna. Getting started. Pinakauna. Okay. Okay, sige. Thank you. Thank you, Miss Anna. But before we proceed, I think I need to introduce first who volunteered to present today. And I may call on Miss Ethel and Miss Jessica to introduce themselves, and also you, Anna, to introduce yourself, please. Thank you.
Is it Jessica comes first or
Ikaw na.
Ini,
all right?
ikaw na.
So, hello everyone. My name is Ethel. I grew up in Aklan, so Aklanan talaga ako. But currently I'm living here in Quezon City, and I am a proud mom of two teens and a wife to one very patient husband, just one lang talaga. I graduated with a bachelor degree in accountancy, and I have built a diverse career over the years. I work as a billing clerk in a medical institution for 16 years. Then I shifted, I mean, I I shifted to gears and prioritize my family. Along the way, I work as a school admin, also in call center before I transition into online bookkeeping. So I have I work in a US bookkeeping firm. That was my recent experience. But before that, I do some outsourced work for US clients. So my niche was really for real estate. And today, I'm joining here to grow my skills, especially in taxation and bookkeeping still. And I am excited to explore flexible opportunities where I can apply my experience. I was introduced here in this group by my friend Jessica, so medyo late na ako nakapasok, kaya medyo naghahabol sa taxation. So I'm looking forward to learn and connecting with all of you. Thank you.
All right. Thank you, Miss Ethel. And next one, Jessica, are you available now?
Yes. Can you hear me clearly?
Yes po.
Okay, great. Okay, so hi to all. My name is Jessica, and I don't want to take much of your time because I don't have so much to share also, but except that I live in Baguio City, and my father is from Cuenca, Batangas. My mother is from La Union. I'm a fur mom of two fur babies who are my great joy in my life. So, career-wise, I finished a degree in accounting, Bachelor of Commerce. And after our graduation, I was not able to practice accounting because I was directed to a different path. So, good thing with God's grace, I was directed back to bookkeeping. And currently, I have a part time gig as a bookkeeper for a US client. Though even I have a client, it doesn't mean that I am an expert. I'm still learning the ropes in QuickBooks, and if and I came to know this community in US tax prep course through one of the mentors in TSBA. I was interested to add value to my clients, so I joined, and I'm very grateful because I have no regrets in joining. Not only because of the learnings that I got here, but I also found a mentor, a community, a team. That's Team Shawnee. We're Team Shawnee, who are down to earth and very helpful. So that's it. Thank you.
All right. Thank you, Jessica. Next, Anna.
Hi, good evening again. I'm Ana Nobleza. I came from the land of promise, Mindanao, specifically Siargao Island. But currently, I live in San Jose del Monte, Bulacan. I have a degree in accountancy years back. So, 19 kopong-kopong pa yan, hindi ko na lang sasabihin. My first freelance gig was with Upwork as an e-commerce VA. That was 2020 during the pandemic. Uh, I have an experience also being a tax preparer for one tax season last year. through Bedrock Business Builders as an intern. Uh, we do end-to-end bookkeeping, tax preparation and filing using Drake software and Zero for the bookkeeping. I want to learn more about US tax and bookkeeping. Thanks to Borderless Accountants for giving us this free course. More blessings to Chris, our mentor, and team Borderless Accountants. That's all. Thank you.
Thank you, Anna. And before we will start, I'll introduce myself first. I am Marie Chris Cortez. I am a double degree holder, financial account, management and financial accounting, and also BS accountancy. And I practiced here in the Philippines. I work as a assistant financial controller in a local company for more than a decade now, and I am currently working as well in Australia as a management accountant. I handled multiple entities, but it belongs to a one group only. And then the reason why I'm here because I want to learn more on US bookkeeping or accounting and taxation because I haven't had an experience or actual experience with US, and I am planning to transition into a US taxation. So that's why I am here and very much thankful to the team and to Chris um who, who are our mentor. And also I am with Team Shawnee and the mother dear who are very supportive to her team. And thank you, the three of you was the courage to volunteer to present uh tonight and tomorrow. So yeah, Ethel and Jessica will present today, and unfortunately I don't have a QBO, so Anna will do the navigation of the QBO. So take it away, guys. Thank you so much.
Okay, before we start, can I check is our recording on for live? Yeah, right.
It's recorded na po. Thank you.
All right. Very good. Okay, so let's start with lesson one. Okay, so lesson one is getting started, putting it all together. Okay, so now it's a time to dive into the next step of reconciliation, actually doing it. Let's delve into the details and practice reconciling accounts. We'll also explore how to identify and fix reconciliation errors along the way. Get ready to put your skills into action. All right, so let's go to lesson two since we usually skip the glossary. Okay. All right, so on lesson two, it's preparing for a bank reconciliation. Be prepared. Reconciliation is the process of comparing two sets of record at the end of a particular accounting period, most often monthly, quarterly, or annually. Let's look at the two types of records that are used in reconciliation: source documents and bookkeeping records. Select the card to read the other side. Source documents: the original records that prove a specific transaction took place. Bookkeeping records: the entries in the accounting software or general ledger. All right. So take it away, Miss Chris.
I think Miss Ethel can can
Okay,
recite this one.
let's we just do it. All right.
Yeah.
Question one: the ledger balance of a certain date. So let's select the item that matches the definition. Adjusted trial balance, unadjusted trial balance, book balance, and natural balance. So which one is the answer?
Majority answered book balance.
Okay, so the answer is book balance. All right, that's correct. You selected the correct response. Let's go to the next one. The process of comparing transactions and activity to supporting documents. We have amortization, reconciliation, book balance, and natural balance. All right, so mostly I think it's reconciliation. All right, let's check. Okay, again, that's correct. Now let's move on to the next one. The original records that prove a specific transaction took place. We have source documents, unadjusted trial balance, reconciliation, and natural balance. Which one is the answer? All right, so mostly answered source documents. Let's check if this is correct. Okay, very good. It's correct. So let's continue. Okay, so that's it. We're done on that activity. Now let's move on knowledge check. So aside from the bank and credit card accounts, what other accounts should be reconciled? Select all that apply. So we have actually one or more answers supposedly. One, we have prepaid expenses, accounts receivable, accounts payable, notes payable, notes receivable. So which one? Some check A, some all of the above, or
All of the above.
okay, so let's check all right and submit. Okay, so that's right. All of these accounts that can and should be reconciled regularly to be sure that the books are accurate and up to date. Reconciling is not just about banks and credit cards. Other accounts can and should be reconciled. For example, prepaid expenses, accruals, and loan balances. Number two, recurring expenses like bank service charges and interest revenue. This may not be recorded in the books at the time they are incurred, but they still need to be reconciled. Let's look at the definitions of these recurring expenses and what type of things fall under this classification. So let's select the plus icon. Let's start with bank service charges. Okay, bank service charges. Bank service charges are fees imposed by the bank for various services provided to the business, such as account maintenance, transaction processing, or overdraft protection. These charges are necessary expenses incurred by the business for utilizing banking services. When recording bank service charges in the accounting books, they are typically recorded as a debit entry. The debit entry reflects an increase in the expense account associated with bank service charges. All right, let's go to number two, interest revenue. Interest revenue is a type of income that a business earns from various sources, such as interest bearing bank accounts, loan, or investments. When the business receives interest income, it is recorded as a credit entry in the books. The credit entry reflects an increase in the revenue or income account associated with interest revenue. All right, let's go to prepare the books. So before you start the reconciliation, you need to prepare the books. Let's start with, what's this? Is this an equation? Okay, this is assets equals liabilities plus equity. Remember, in everything you do as a bookkeeper, you should always keep the accounting equation in mind and ensure that books are in balance. Okay. One, make sure you entered all transactions for the previous accounting period. Two, ensure the books are balanced refer to the balance sheet and remember the accounting equation. 3. If accounts are not balanced, make adjustment. Okay, so this is a knowledge check. As you are preparing the books, what do you do if the accounts are not balanced? 1. Ignore them and move on. 2. Make adjustments. Or C. Have the client add or remove money from the bank account to make it all even out. So, which is the answer? Okay, everybody answered B. All right, let's submit. Okay, so we got a correct answer. If accounts are not balanced, make adjustment and be sure to provide clear notes as to why the adjustments are being made. Okay, now let's move to the reconciliation process. The reconciliation process consists of 4 steps. All right, so first step is gather source documents. 2. Compare accounts and or transactions. 3. Make any adjustments needed and complete the reconciliation. 4. Close the accounting period. Okay, so remember, bookkeepers should establish a system to capture, record, and file source documents all months, quarterly, year long. Don't wait for reconciliation to gather them all. All right. Now let's go to lesson 3, reconciling bank accounts, bringing the account into balance. Let's review the definition of a bank reconciliation. What is a specific type of account reconciliation? Bank reconciliation. Compare the books to the statement issued by the bank. Compare if every transaction in the bank statements to the business internal records, including bank deposit slips and canceled checks to verify both records are matching. Let's move to knowledge check. So, what are typical source documents for a bank reconciliation? Select all that apply. We have bank statement, sales receipt, purchase orders, and deposit receipt. So, actually need one or more answers here. So,
That's bank statement and
yeah,
deposit
bank
receipt.
statement, sales receipt, and deposit receipt. So I guess mostly here have experience in bank recon, even in practices or, um, during uh, paid courses, right? This is actually being taught. So many bank reconciliations are complicated. So let's try to submit our answers. Okay, so that's correct. We chose the correct answer. Bank statements and deposit receipts are typical source documents for a bank reconciliation. So we only have 2. Okay, what type of bank reconciliation is it when you are going line by line through the statement and books? Okay, we have summary level reconciliation, line level reconciliation, individual reconciliation, and transactional level reconciliation. Okay, so mostly the answer is D. All right, let's submit. Okay, correct. So transactional level reconciliation involves a detailed comparison of the books line by line with another source document to ensure that every transaction is accurately recorded and accounted for. Now, during a bank reconciliation, you will perform transactional level reconciliation by carefully reviewing each transaction one by one to ensure they match between the source documents and your own records. take a closer look at the process in the following videos. All right, so let's play the video. Please play the video. I hope there's an audio. Yes.
Bank reconciliations are a big part of a bookkeeper's job. But what does a bank reconciliation actually entail? When you conduct bank reconciliations, you'll be comparing balances and transactions on the bank statement to balances and transactions in your accounting software or general ledger. Let's step through the process. In Step 1, gather your source documents, including bank statements and deposit receipts. In Step 2, compare the transactions. For this process, compare the starting and ending balances of the bank statement with the balances in the general ledger or accounting software. Then, compare transactions in the general ledger or accounting software with the bank statement to ensure accuracy and verify which transactions have cleared the bank. Finally, check for all outgoing and incoming funds, including any outstanding checks, deposits in transit, or checks that were returned due to insufficient funds or NSF. If the records don't match, investigate and find the errors. In Step 3, make the necessary adjustments to fix any errors and complete the reconciliation. The cleared balance in the books should now match the cleared balance on the bank statement at the end date. Once the bank statement is reconciled, you can proceed to Step 4, close the accounting period. Bank reconciliations are detailed and time-consuming, but important to the financial well-being of your client's business. It's important to become familiar and comfortable with the process.
Okay, so that was an interesting video. Now let's look at the scenario about reconciling a bank statement. Setting the scene. You are reconciling the bank account for your client, a retail store selling gaming supplies. You have the most recent bank statement and are comparing it against the entries in the accounting software. Use the documents that follow for reference as you proceed through the scenario. All right, we're looking at the client bank statement. Okay, so account summary, closing date, April 25, previous balance is 6,161.04, deposits 245, payments, withdrawals 1,600. Now the new balance there is 4,806.04. Okay, now let's look at the ledger account, accounting software, cash. On March 1, we have an opening balance of 7,362.63. On March 5, we have an expand. No, what's this? We have gaming supplies revenue of 541.98. Then on March 11, we have a loan payment of 1,743 and 57 cents. Now on April 1st, we have an opening balance of 6,161 and 04 cents. On April 5, we have again a gaming supplies revenue, which is 245. Now on April 11, we have loan payment, which is 1,600. Okay, Miss Anna. Okay, do the, all right, go ahead. Just lower down. Do the beginning balances match? Select the correct response. Yes or no. Is it yes or is it no? Let's scroll again for the balances on the ledger and the balance sheet. Okay, so let's compare. So March 1, our balances.
Go up.
Okay, so what is our answer? Is it a yes or is it a no?
Yes.
Okay. All right. Thank you, Arnold. So that's a yes. All right, correct. Look at the date on the bank statement, then compare the previous balance on the bank statement to the matching date on the ledger. In this case, April 1 opening balance. Okay.
You can also click the no, so there we will know why is it no.
Yeah, okay. So no, that's incorrect. Why? Because look at the date on the bank statement, then compare the previous balance on the bank statement to the matching date in the ledger. In this case, for April 1 opening balance. So that's the logic of the answer. All right, now let's go to the next question. Do the ending balances match? Again, select the correct response. It's a yes or it's a no. What is our response?
No.
Okay, so mostly are what? No? Correct. Look at the date on the bank statement, then compare the new balance on the bank statement to the matching date in the ledger. In this case, May 1st opening balance. Okay, let's check the yes. No, that's incorrect because look at the date on the bank statement, then compare the new balance on the bank statement to the matching date in the ledger. In this case, May 1 opening balance. So I hope we understand the logic. Now, since you discovered that there's a discrepancy, you need to go through the transactions and figure out where the error lies. Let's look at the transactions from the statement and compare them with the accounting software. All right, so we're looking at the bank statement. Okay, this is from March 25, yeah, March to April. Okay, on April 11, we have a loan payment, 1.6, and we have also a gaming supplies revenue on April 5, 245. Now let's look at the ledger. Okay, so we have March 1, opening balance 7,362.63. March 5, gaming supplies revenue 541.98, and March 11, loan payment 1743.57, and on April 1st, opening balance of 6161.04. April 5, gaming supplies revenue 245, for 11, loan payment 16, for 29, gaming supplies revenue 29.32, and May 1st opening balance of 4,835.36. So again, so the question here is, do the transactions match? Now again, let's select the correct response. Is it a yes or is it a no? Anyone? Okay, we have someone who said no. Okay. Are we all in agree that it's a no? Okay, all right. So let's click on the no. Correct. Okay, very good. There's an extra deposit in the accounting software that has not cleared the bank yet. Now let's check the yes. It's incorrect because there is an extra deposit in the accounting software that has not cleared the bank yet. Okay. Now remember, when reconciling an account, you need to compare beginning and ending balances. Then check that each transaction has cleared the bank. All right, let's go to check outgoing and incoming funds. All right, so once you have compared the beginning and ending balance and check that each transaction has cleared the bank, the next step is to check outgoing and incoming funds to ensure that all funds have been accounted for in both accounts. explore this topic in the following video. Okay, let's play the video.
Sometimes during a reconciliation, you'll find that there are some transactions that haven't cleared the bank. And as you look at the reconciliation screen, you have to ask yourself, why aren't these checked off? You have to research those transactions before you finalize the reconciliation. Watch out for transactions that may have cleared in one place but not another, like transactions that show up in the accounting software but haven't cleared the bank account yet. There is often a lag time between when a transaction is initiated and when it shows up on the statement. There are different classifications for issues where the transactions haven't cleared the bank in time. Sometimes checks that were written over previous weeks do not clear the bank as of the closing period date. These are classified as outstanding. Other times, the business deposits funds that do not clear the bank as of the closing period date. These are classified as in transit. So what should you do if there are outstanding or in-transit transactions? Believe it or not, you shouldn't do anything. Don't void the transactions or move them to another account on the balance sheet. Just wait for them to show up in the next reconciliation. But how does this affect the accounts? If the client paid bills with checks that have not cleared, the actual balances for accounts payable and cash are higher. And if they deposited a payment for services that has not cleared, the actual balances for accounts receivable and cash are lower. In addition to looking for transactions that may not have cleared yet, also look for non-sufficient or NSF checks. NSF checks are checks that have bounced, meaning that the check has not been paid because the issuer did not have enough money in their bank account. What should you do if there is an NSF check? Debit the accounts receivable and credit the bank account. If there is a fee associated with the NSF check, you should debit bank fees and credit bank accounts. Sometimes, as a bookkeeper, you have to be a bit of a detective to find out why some transactions haven't cleared yet. Doing this effectively and accurately will be a great service to your clients.
All right, so we're done with the video. Okay, so I hope that's clear. Now, let's move to knowledge check. What should you do if a deposit is still in transit? Okay, one, void the transaction. B, move the transaction to another account on the balance sheet, create a transaction for an offsetting amount. And D, wait for them to show up in the next reconciliation. All right, so mostly the answer is D. All right, let's submit. Okay, we got the correct answer. If there's an outstanding deposit or checks in transit, the bookkeeper should wait for them to show up in the next reconciliation. If they don't clear for several months, then you might want to investigate further. All right, now let's move to the next knowledge check. How does an outstanding check affect the books? A, accounts payable and cash balances are lower. B, accounts receivable and cash balances are lower. C, accounts payable and cash balances are higher. And D, accounts receivable and cash balances are higher. Okay, so I think we got the answer is C. Mostly answered C. Let's submit. Okay, so we got the correct answer. If the client paid bills with check that have not cleared, the actual balances for accounts payable and cash will be higher. Right. So lesson 4, finding reconciliation errors. Put your detective hat on. If during reconciliation you find that the records don't match, it's time to become a detective and look for discrepancy. Now let's go to knowledge check. Which of the following are steps you should take when looking for discrepancies? Select all that apply. Okay, so A, compare the total number of transactions to see if any line items are missing. Call the bank to ask if their records are up to date. C, check each transaction line by line until you find the discrepancy. And D, ask the client to go through their accounts line by line until they figured out what they did wrong. Okay, so they say that it's A and C. Mostly the answer is A and C. Are we good with this? All in agreement? Then let's submit. Okay, wonderful. So, if the records don't match, you should compare the total number of transactions to see if any are missing or duplicated, and then check each transaction line by line until you find the discrepancy. Okay. So remember, when checking for discrepancies, you need to watch for outstanding and in transit transactions. They have not cleared the bank yet, as well as any non sufficient funds checks. So let's hear a bookkeeper talk about their experience dealing with some common reconciliation errors. Okay, let's play the video.
I find that there are a couple common issues with they'll reconcile a certain month and check off everything that has cleared according to the bank statement. That's great, but don't forget that you also have to look at what hasn't cleared. Here's an example I've seen. My client took an Uber ride and the tip was recorded later than the actual base fare. Those two things never cleared, but the full amount was put into the system. When these type of issues are fixed, it can significantly change what things are looking like as far as expenses or income go. And that's just for a $50 Uber ride. I've had situations where I've gone in and done reconciliations and there has been a swing of hundreds of thousands of dollars on the client's books because of transactions that has never cleared. In fact, you may potentially find fraud situations when you go through reconciliation. Obviously, you don't want that to be the case. But I've seen things that didn't match up and was like, wait a minute, this is really strange. Did you do a transfer? How come I'm not seeing it in the account you always transfer to? Basically, when you finalize a reconciliation, make sure there's no old transactions sitting out there unresolved. If there is an old transaction that hasn't cleared, you need to research it to understand why and fix it. Once we start to dig in, we may see that some of these uncleared transactions are actually duplicates or fraud. Other times, they may just be errors that need to be corrected. By digging in and resolving these issues, we can ensure the accuracy of the financial records.
Okay, so now that you've heard about one person's experience with common reconciliation, let's test your knowledge of the common terms used in reconciliation. Let's go to the glossary challenge. All right, question one. A bookkeeping entry transaction is missing. Select the term that matches the definition: error of commission, error of original entry, error of principal in accounting, or error of omission. Okay, they say that's letter D. Check. All right. So we selected the correct response. Let's continue. The amount was written incorrectly under the incorrect account. One, error of commission, data entry error, rounding error, or compensating error. Okay, they say that it's B. Again, it's correct. So we selected the correct response. Let's continue. Okay, a type of data entry error where the bookkeeping entry is made to the wrong type of account. Okay, we have error of commission, error of original entry, error of principal in accounting, or error of omission. Oh, we have different answers. Miss Chris, what's our answer here?
Principal.
All right, error of principal in accounting. Okay, all right. Again, we have this uh correct response. Let's continue. Okay, so a type of data entry error where the bookkeeping error was made to the correct type of account, but the wrong customer or item. So we have error of commission, error of original entry, error of principal in accounting, or error of omission. Okay, we have B. We have someone who answered A. Let's see which one, A or B. I think mostly R. Oh, but they have, wait, I have a lot of A. Okay, we'll try. We'll try A. Miss Chris, right? Yeah, okay.
Tama
So,
po.
all right. So, kinabahan ako doon. Okay, let's continue. All right. So, question 5, a type of data entry error where the numbers were flip-flop. Okay. So, is it rounding error, error of original entry, error of omission, or error of commission? Okay. So, let's see. Rounding error, the answer. Or B? What's that? Which one? Okay. Which one, Miss Chris?
A, letter A, rounding error.
Okay.
Ah,
Oh, okay. So we got that wrong. It's error of original entry.
original entry
Yeah,
pala.
let's check now the question again. A type of data entry where the numbers were flip-flop. So I guess so.
Ta-
Yeah, because
Tama,
rounding
tama.
error is the one in the sense, right? Like
Yeah, with the sense. The immaterial one.
yeah, okay. Sorry about that, guys. Okay, let's continue. All right. Question 6, the correct amount is posted to the correct accounts, but the debits and credits are reversed.
Offset. Ay,
Okay, rounding
um,
error, error of commission,
reversal.
reversal of entries, or error of original entries. Yeah, I agree. Complete of reversal of entry. Okay, finally we got the correct response. Okay, question 7. Wow, this is quite very long. Okay, numbers were rounded. That shouldn't be. Okay, we know
Yan
the
yun.
answer. Okay, error
The
of
rounding error.
commission, compensating error, or rounding error. Obviously, it's the rounding error. All right. Okay. Okay, question 8. I hope this is lucky. Two or more errors cancel each other out. We have error of commission, rounding error,
Setting.
compensating error, error of omission.
It's
So,
compensating error.
yeah, it's compensating error. Okay, finally, we got the correct one. Okay, we're good. So we just missed one. Okay, so time to practice. Let's explore a series of scenarios. For each one, find and identify the error. Okay, scenario 1. Frank, the owner of a plumbing service, has brought his bank statement to you for reconciliation. Frank's business bank statement. Okay, so the previews. Balance is 73,119.65. Deposits is 40,519 and 94 cents. And withdrawals is 10,079.97. So our new balance is 103,559.62. Okay, so our transactions from May 1 to 31 is on May 2, branch deposit of 30,141 cents. On May 13, a loan payment of 1,020.50 cents. On May 22, we have a check 2347 for the amount of 9,059.47 cents. And on the 20th, we have an ATM deposit of 10,419 and 53 cents. Okay. So here we go to the general ledger. Okay, so on May 1, we have an opening balance of 73,119 and 65 cents. We have May 2 truck dealership, new pump truck, 30,141 cents. On May 13, we have a loan payment of 1,020 and 50 cents. And on the 22nd, we have a plumbing supply store, 10,419 and 53 cents. And on June 1st, our opening balance is 112,619 and 09 cents. So our question here is what type of error occurred? We have error of commission, transposition error, or compensating error. Okay, so which one?
Commission. Because there were 9 commission. Oh, A. 9,000 that did not record.
Okay, so A, try A. Okay, we have a correct answer. It was an error of omission because a transaction occurred that shows up on the bank statement but not in the general ledger. Check 2347 for 9,059.47 was never recorded into Frank's books. Why do you think it was not recorded? Because maybe it's still in transit, right? Okay, so let's go to the next one. What happened? So after some investigation, you discovered that bank had a separate checkbook. Oh, in his track, and he had written a check to what's this for the purchase of winter track tires for a nice pump truck and forgotten to give you a receipt. So I guess that's what happened, not in transit. Okay, so scenario two, the Dallin is a graphic designer who runs a graphic design studio. He charges $85 per hour, and recently he did 12 hours of work for a client, which resulted in a credit sale totaling 1,020. At the end of the accounting period, his bookkeeper notices an error. All right, our trial balance here shows this is the portion of the trial balance. Can you spot the error? Okay, the checking is 1,201 and 35 cents. Saving is 801 cents. Graphic supplies is 620. And notes payable is 4,000. And cost of goods sold is 405. What is the error? Is it graphic supplies, notes payable, or cost of goods sold? Okay, most answered A. All right. The graphic supplies account has a negative balance, which indicates an error was likely made. Very good. Now, what happened? The credit for the revenue from the design work was applied to the graphic supplies expense account instead of a graphic design sales account, a revenue account, as indicated in the following excerpt from the general ledger. Okay, so let's look at it. So there you could see the graphic design work invoice number 2314. The account name was graphic supplies expense in the amount of 120 on the credit side, and graphic design work invoice 2314 accounts receivable on the debit side is 1020. So the result in the graphic supplies expense account being reduced by 1020, which caused the negative balance. So what type of error occurred? Is it the error of original entry, which is a transposition error, or error of commission, complete reversal of entries, or error of principle in accounting? All right, so the majority is A, but Arnold answered B. I don't know. Pampagulo ka ba, sir? Okay. Okay, some answered D. Okay, which one, Miss Chris?
Ako talaga deciding factor. Okay, A.
Okay, let's see if A. Oh,
Incorrect.
okay. Let's check which one.
Try again.
Try again. Okay, let's try D.
Commission.
Oh,
Ayun.
telling Mr. Arnold that. Okay. So because the entry was made to the expense account rather than the revenue account, this was an error of principle in accounting. So very good to those who answered D. Okay, now let's go to continue. Let's continue scenario 3. Miguelito owns a well-known pizza parlor. You are recording the restaurant sales from the day. On this day, they sold 2560 or 2,560 worth of food. Transaction journal. This is the journal entry for the transaction. May 1, daily cash sales, food sales, 2560, and May 1, daily cash sales, checking account 2506. Okay.
Mali.
So there's okay. So what type of error occurred? Rounding error, error of original entry, error of principle in accounting, or complete reversal of entries?
Okay. Yan na yung error of original entry.
Yes, okay. So obviously it's B. Okay, let's submit. Okay, so we got it right. This was a transposition error or an error of original entry. Since the numbers were flip-flopped, the debits and credits do not balance, with the debits at 2506 and credits at 2560. So again, what happened? When you were entering the transactions, you entered 2506 instead of 2560, resulting in the transposition error. So as a bookkeeper, we actually need to be accurate in our entries. So we have to double check, or as much as possible, triple check, and make sure that we are recording the right amount. So scenario 4, Bean owns a web design business that also hosts websites. The charge for web hosting is 120 per year. Last month, they bought some office supplies, paying for 2 boxes of paper at 60 per box with a check. As you go over their books, you spot an error. Can you see the error? Okay, let's look Hear the following excerpt from the Business Transaction Journal and try to spot the error. Payment for web hosting. Web hosting. Accounts receivable 120. Okay, debit side and the credit side is checking 120. So do we see an error? None, I think. But let's see. Let's look at the next one. Purchase office paper. Okay, so the account name is checking. Now the debit side is 120 and next the credit side is office supplies 120. Okay, what type of error has occurred? So it's not the amount now. So which is what? A rounding error, a compensating error, error of commission, or error of principle of counting. Okay, so let's go with B.
Wait.
Oh, it's incorrect. Sabi ko na eh, manahalig ako kay Sir Arnold eh. Kasi ang sagot niya ano, B
That's
yan.
compensating error kasi same amount yun eh.
Oo, B. Okay.
Kaya sabi ko wait.
Okay, so because two errors were for the same amount and cancel each other out, this is a compensating error. Okay, what happened when you entered the transactions? You entered the web hosting as a credit to checking and a debit to accounts receivable, and the paper purchase as a debit to checking and a credit to office supplies, when you should have done just the opposite. The resulting two errors cancel each other and leave the accounting equation in balance. Yeah. All right. So errors in the trial balance. Nakakaano pala, sakit sa panga. Okay, so errors in the trial balance can be temporarily resolved by allocating the difference to a suspense account. A suspense account is like a clearing account that holds the discrepancy. At a later stage, a suspense account reconciliation is performed to identify and correct the errors causing the imbalance. This ensures the trial balance is accurate and the financial statements are reliable. Okay, scenario 5. Okay, so you finish reconciling the back statement for a children's clothing manufacturer that designs unisex children's pants that are stylish, made from organic cotton and fun. As you are running the unadjusted trial balance and preparing to close the accounting period, you notice a one-sided entry in the accounting records in the amount of $6.47. How do you fix the one-sided entry? Okay. A, allocate the difference in the trial balance to a reconciliation adjustment account. And then an accountant will carry out an adjustment reconciliation later on. B, reverse the transaction, then re-enter it properly, include a memo indicating that you did and why. And C, ignore it. One-sided entries aren't that big of a deal and will work themselves out in the end. Okay, what's our answer here? When you click the chat box, Miss Anna, down the chat box with the down arrow.
A po, mahaba eh.
A daw. A.
Natawa ako sa A dahil mahaba.
Okay. Sige, go.
Wait lang.
Oh,
Sige
wait
na.
lang.
Bahala na kayo. Sige.
Ow, A.
Ayaw kong i-click yung chat box kasi baka mawala yung share ko.
Ay, ganon. Okay. Sige.
B.
Correct. A. Okay. You
A
should
pala.
allocate the difference in the trial balance to a reconciliation of adjustment account. And then an accountant will carry out an adjustment reconciliation later on.
Pinagbawal na technique sa school.
Talaga. So, what happened in this case, the business experienced a software glitch that caused the one sided entry. Accounting software is designed to prevent unbalanced journal entries, but occasionally disruptions or glitches may cause one sided entries to occur. In such cases, it's important to address the issue promptly. If using software, reaching out to the software provider can help resolve the problem. Manual systems, however, are actually much more susceptible to these types of errors. Continue. Okay, remember, we are all
Human.
human and mistakes happen, so no one is perfect. That's one reason reconciliation is so important. By finding and fixing errors, you ensure that the financial information is accurate and reliable. This helps stakeholders make informed decisions using trustworthy data, leading to the smooth operation and success of the business. Okay, we have troubleshooting reconciliation errors. Is anybody who wants to, add on to what we learned? If not, we can continue. No more, all good. Okay, so let's explore a few tips about how to troubleshoot errors in the following video.
Everybody makes mistakes. We all do it. It's inevitable. It's also inevitable that, as a bookkeeper, you're going to run across some errors that may have occurred in your client's books. When you find errors, knowing how to troubleshoot them is important. Here are 7 tips on how to troubleshoot any errors you may find. Tip 1. Verify you are working with the right account. This sounds simple, but many times, bookkeepers are working with multiple bank accounts, so it's an easy mistake to make. Verify that the account you are trying to reconcile matches the external account record. Tip 2. Look for transactions the bank has recorded, but you haven't. Some bank transactions are easy to overlook in the business books. Make sure you are checking ATM transactions, special fees, automatic withdrawals, and direct deposits. Tip 3. Look for reverse transactions. These are transactions that you entered backwards. If there is only one error, you can look for a transaction that is equal to half of the irreconcilable difference. For instance, if the difference is $200, you may have entered a $100 deposit as a withdrawal or vice versa. Tip 4. Look for a transaction that is equal to the difference. If the difference is equal to the amount of another transaction, you may have incorrectly marked the transaction as cleared or uncleared, or made a duplicate entry. Tip 5. Check for transposed numbers. Transposed numbers occur when you reverse 2 digits. For example, recording $45.89 for $45.98. Tip 6. Ask someone to check your work. An extra set of eyes is sometimes all it takes to find an error that you overlooked. For bank reconciliations, ask the bank to assist. This may be a free service. Tip 7. Look for multiple errors. If you find an error and still can't balance the account, start checking the list again from the top. For example, you may discover a transposed number and find that you entered another transaction backwards, or perhaps incorrectly cleared or uncleared a transaction. We all make mistakes, but knowing how to find and fix the mistakes in reconciliation is an important skill for all bookkeepers.
Okay, so we compiled the 7 tips from the video. into a job aid that you can print and keep as a reference. Okay. All right. I don't think we need to read that. Okay, let's go to try it out. A dog grooming salon purchased a few items on credit last month. Compare the credit card statement to the general ledger, then answer the questions to see if the two accounts reconcile. Okay, so looking at the credit card statement, the previous balance is 1,003 and 73 cents, payment 900, and purchases at 399 and 95 cents. The new balance there is 503 and 68 cents. Okay, let's look at the general ledger. These are transactions from March 25 to April 2025. Okay, May 16, office supplies 84.95. On April 11, ACH credit card payment of 900. And on the 5th, groomer supply store 315. Okay, now here's the ledger account for the credit card. Okay. So March 1 opening balance 2,276 and 22 cents. March 5 advertising 621.78. 11th ACH credit card payment 1894.27. Opening balance on the 1st of April 103 and 73 cents. On the 5th of April, Groomer Supply Store shampoo 315. And on the 11th, we have ACH credit card payment of 900. And on May 1st, our opening balance is 418 and 73 cents. On May 4, we have Groomer Supply Store dog biscuits at $36.85. So our knowledge check here. Check the opening balance on the credit card statement. What line does it match on the ledger? Is it March 1 or April 1 or on May 1? And D, none. The ledger does not match the credit card statement. Okay, so what's our answer, guys?
B daw. Or
Okay.
1.
Let's see B.
Is
Okay,
B
so
okay?
yes, submit.
Okay, we got it right. So April 1 is opening balance is the corresponding line in the ledger. Okay, check the closing balance on the credit card statement. What line does it match on the ledger? Okay, March 1 opening balance, April 1 opening balance, May 1 opening balance, and D none. The ledger does not match the credit card statement. Okay, so the answer, guys.
Most of the answers is D,
Okay, D.
dog.
Okay, tumpak. None. The ledger does not match the credit card statement. Okay. Are there any missing transactions? Yes. A transaction is missing from the credit card statement. No, there are no missing transactions. And last, yes, a transaction is missing from the ledger. Eeny, meeny, miny, mo. What's the answer po?
Okay, answer is C.
C. Submit. That's right. The number of transactions is different. There are 2 transactions in the ledger, but there are 3 on the credit card statement. The April 16 transaction for 84.95 is missing from the
Missing from the
general ledger.
ledger.
Okay, so what should you do? So when you identify an error, review all of the accounts in the ledger to ensure the transaction was not entered in the wrong place. In this case, the bookkeeper entered the credit card entry as a cash expense instead of a credit expense. Let's look at the ledger account. Cash. Okay, the opening balance on April 1st, it's 8,500. On the 16 office supplies, 84.95. And on May 1st, the opening balance is, or new balance is 8,415 and 05 cents. So this error not only impacts the credit card account balance, it impacts the cash account balance too. This will need to be corrected with an adjusting entry to debit cash and credit the credit card account for 84.95 with a memo note explaining why the adjusting entry was made. Okay, I'm done with my, part. So it's Ethel now. Thank you guys for listening.
Okay. Lesson 5. Hello. Am I audible? Hello.
Yes
Yes.
po.
Thank you
Yes
so
po.
much. Fixing reconciliation errors. Mistakes happen, so fix them. Right. Fixing errors in accounting depends on the type and location of the error. The approach to create correcting errors varies depending on the situation. To fix an error, you need to identify the transaction where the error occurred and make the necessary corrections. It's important to make a note on the account, mentioning the date and the details of the error correction. There are 2 main methods you can use to rectify errors. So, number 1, reverse the incorrect entry and correct a new journal entry to accurately record the transaction. Number 2, make a single journal entry that, when combined with the original incorrect entry, corrects the error. When making the correction, include a memo or note to indicate that the entry is correcting an error from the original date. This helps to provide clarity and maintain an accurate record of the correction. Try it. Fixing data errors. As you are reconciling the accounts per a peak family tree farm, you enter an error. On December 3, the business received payment on an invoice for $875. Let's take a look at their transaction journal and see if we can spot the mistake. So, paper meal, cash, debit 857, and then accounts receivable, credit 875. What is the error? Cash account should have been a credit, incorrect amount in cash, incorrect amount in accounts receivable. Account receivable should have been a debit.
I think that's
So
transposition error.
most of the answer is letter B, incorrect amount in
Amount in
cash.
cash.
Great job. The entry in the cash account is for $857 instead of $875. This is a transposition error. What do you do? Select all that apply. First, add a new journal entry that credit cash 875 and debit accounts receivable 875. Credit the cash account 857 and debit the accounts receivable account 875. A new journal entry that debits cash 875 and credit accounts receivable 875. So the answer is journal entry. I think
Si
it's,
Arnold talaga BCE.
oh, Sir Arnold daw, PCE.
BC. Meron
Pababa
pa
nga
atang
ako.
pababa pa.
Ayun. Credit. The next one. Alright, basahin ko. Credit the cash account 875 and debit the accounts receivable 857. Then add a memo explaining
Memo.
why and how the entry was fixed. So ito.
Yan, tama yung E. You add the memo. Add journal entry that debits cash 875 and credits accounts receivable 875. C, the C. BCE. Credit cash credits and debit accounts receivable. And it's only B, BCE. Wala yung A. Yan, it's B. No. B. B. Pangalawa. Wala yung D. Yan. It's only 3. BCE. Yes. Yan po. Submit.
Okay. So great job. You should reverse the incorrect entry and add a new journal entry that records the transaction correctly. Make sure you also add a memo explaining the action taken and why.
Pero bakit kaya nag-push yung entry niya, no? Na kulang yung isang side sa isang side. Di ba hindi sa QBO, hindi yan. Tsaka sa anong software, mag-error yan eh. Sasabi na hindi siya balance.
Baka manual.
Pero for the context of siguro kaya pero in reality kasi may system na hindi po yan tinatanggap ng system pag may mali na sa sa amount.
Alright,
I mean
these are
hindi balance yung
magka-same.
amount. Yes po.
Manual
Alright.
bookkeeping yan. Manual bookkeeping.
Manual bookkeeping siya, hindi siya QBO.
Pero naka-QBO pala tayo ngayon, dapat hindi.
O di ba? Naka-system eh. Pero siguro for the sake of lang siguro parang explanation or scenario kung may mangyaring ganon. Pero in reality wala na po yun kasi automated na mostly mga yun.
Right. Next, fix the error. Incorrect amount. Katrina, the owner of Yoga Studio, bought a new laptop for $1,000 using her credit card. As you are reconciling the account, you find an error. So transaction journal, office expense, debit 1,000, cash 1,000, credit. What is the error? The wrong account was credited. Office expense should have been a credit. Cash should have been a debit. Both accounts should be a debit.
It's a wrong account was credited.
Yeah,
Because
right.
she credited cash instead of credit card. Hindi po. Wrong A po, A po.
Try again.
Yeah, that one. A.
Great job. The purchase was made with a credit card but recorded as a cash expense. You found the error. The result is that both the cash balance and credit card payable balance are incorrectly lowered than they should be. Let's fix the error. What What needs to be done to fix the error? Select that apply. Debit cash 1,000.
Debit, cash, and credit card.
Write a memo with the correct information and reason. Credit cash
Credit
account
card.
1,000. Credit the credit card payable account
Yes.
1,000.
And
Debit
also, right,
debit the credit card payable account 1,000.
add, write memo. Yes po.
Okay.
Credit card payable, okay, that's correct. Submit.
Great job. The correct remediation is to debit the cash account 1,000 and credit the credit card payable account 1,000, and then write a memo explaining why you did and why. Let's review the correcting entries. This is the original journal where we found the error. So account name, office expense, debit 1,000, cash, credit 1,000. Now let's fix it by adding the following transaction. Cash correction transaction posted to the cash in error 1,000. Credit card payable correction transaction posted in cash to cash in error 1,000. So now the journal entry looks like this. Account office expense debit 1,000, cash credit 1,000, and then cash correction transaction posted to cash in error 1,000. And then credit card payable correction transaction posted to cash in error 1,000 credit. Remember, when you find errors during your reconciling, you need to fix them and leave a memo indicating what you did to fix the error and why. The reconciliation process allows you to step back and get a comprehensive view of your client's financial situation. It's a fundamental task for a bookkeeper to ensure accuracy and provides valuable insights. While you do not need to dive into specific details of the reconciliation process, when discussing it with clients, you do need to share important findings that you can help them address anyway. Issues and size opportunities for improvement. Reconciliation maintains accurate records, identify errors, and provides clients with reliable financial information to support their decision making and prevent potential problems. So ito talaga yung purpose ng reconciliation. Summary activity. So let's practice. It's the end of the month, and Trevor, the owner of the junk holding business, sends you the bank statement to reconcile. Business bank statement. Previous balance 7,119.68. Deposit 3,319.92. Withdrawals 1,220.99, and the new balance is 9,218.61. So May 28, mobile deposit 107.97. May 22, check 3282, 201.50. Loan payment May 13, 1,119.49. May 2, branch deposit 3,211.95. General ledger checking. Opening balance 7,119.68. Trailer rent business May 2, 3,211.19. May 13, and bank loan 1,091.49. May 22, check number 3282, retail store, 201.50. And May 28, office supplies, supplies revenue 108, and the opening balance 9,146.64. So let's proceed with the knowledge check. What dates did the error occur on? Select that applies. Select all that applies. So is it May 13, May 22, May 28, or none? There is no error. So mostly answered A and C. Okay, let's submit. That's right. There are errors that occurred on May 13 and May 28. What type of error occurred on May 13? Di ko na matandaan. Error of omission, error of original entry, error of omission, rounding error. So mostly answered B.
B po, B. B, B, B.
All right. That's right. The loan payment on May 13 was entered as 1,091.49 instead of 1,019.49. This is an error of original entry or transposition error. What type of error occurred on May 28? Error of omission, transposition, error of omission, rounding error. So mostly answer D. Submit. That's right. The sale of the office supplies store for 107 and 97 was rounded up to $108. Reflection. Each of the previous errors requires a different method to fix the issue. Take a moment to think about how you would go about fixing these errors. When you are ready, select continue. Now that you've considered what actions you would take to fix errors encountered, let's put that thinking into practice in the following scenarios. What should you do? Go through the following activities to fix errors you've found. First, let's fix the errors occurred in May 13 by the first reversing the incorrect entry and then adding a new journal entry to correct the transaction correctly. Use the drop-down menus to update the appropriate cells in the tab. When you are finished, select Submit. So transaction journal, scrap metal holding business, May 13. So bank loan payment, checking, reverse transposition error entry. So payment of the loan. So checking, magiging credit siya. Shucks, nawala ako. Saglit lang po. Medyo na ano yung aking ano.
Debit 1049 and then credit 1049. Kasi that's reversal of error.
Is this okay na?
Yeah, please
Sige po.
submit. That's correct. You entered all the information correctly. Transaction journal, scrap metal holding business, May 13. So bank loan payment, checking, re-enter loan payment correctly.
So you re-enter your payment, meaning your checking is napapawasan. So what will you do? That will be credit.
Credit the checking.
Yeah, and then
At
debit the other one.
mababawasan ang loan. All right. Submit, please.
Submit.
Now let's fix the error that occurred on May 28 by creating a single journal entry that when combined with the original entry must incorrect entry fixes the error. Use the drop down menus to update the appropriate cells. So
that's
paper
adjusting.
company
To
checking
correct rounding. Then revenue. Revenue is credit. Okay, submit. Wait. Because it's adjustment. So you have to debit the revenue. Okay, submit. Continue.
That's correct. You enter all the information correctly. Show what you know.
Okay, malapit na pala tayo matapos.
So, di ko na siguro basahin. Paano na lang po pababa. Start na tayo. You are a bookkeeper finishing the month-end reconciliation for a shoe store. The month-end balance of the checking account from the bank statement is 6,572.49. But on the accounting software, the month-end balance is 6,597.25. Which of the following steps should you take to find and fix the error? Select that apply. Perform a line-by-line transaction review between the bank statements and the accounting software ledger.
That's
Check.
correct.
Yeah, that's right. Check that any outstanding check or in transit deposit.
That's also correct.
Take the difference from another account and put it into the bank account to even things out.
That's a big no-no.
Check for any service fees.
No.
And then ignore it and wait for the annual reconciliation to worry about.
Okay, check for any
Check
service
for the
fees.
service fees.
Okay. Annual reconciliation. Layo naman nun.
You should perform a line-by-line transaction review and check for all the checks and deposit that had been cleared yet, while keeping an eye out for any service fees on banks may have charged. Question 2. Which option best matches this definition? A transaction recorded on the books, but not yet processed and cleared by the bank.
Meaning that's outstanding checks.
Yeah. NSF check, promissory note, book balance in transit. So that is in
It's
transit.
in transit. Submit.
Correct. A transaction recorded on the books but not yet processed and clearly on by the bank is classified as in transit. Question 3. Select the best definition for bookkeeping term outstanding. A transaction recorded on the books and cleared by the bank. A check or other payment issued that has not yet cleared and been reported to the bank statement.
Pwede.
Please check. A transaction that has been voided from the general ledger without an attached memo or explanation. A check or other payment issued that has cleared and been reported to the bank statement but has not yet been entered in the general ledger. A check.
Submit.
Correct. This is proper procedure for a bookkeeper and it's the definition of outstanding. Question 4. You provide bookkeeping services to several different businesses while reconciling the accounts for a sports marketing business. You notice an entry for the purchase of badges that should have been entered in the books for your other client, a music store. What type of error is this? A one A error of original entry, error of commission, compensating error, error of principal in accounting. So this
B.
is
B,
error
commission,
of commission.
because it's a wrong.
Correct. The error of commission is a type of data entry error where the bookkeeping entry was made to the correct type of account, but the wrong customer or item. For example, customer X paid an invoice, but it was credited to customer Y's account. So question 5, while reconciling the accounts for false pet grooming business, you come across a few outstanding checks totaling 523.67. What should you do? Wait for them to show up in the next reconciliation. Void the transaction until the checks cleared on the account. Move the transaction to a liability account titled outstanding check. Create an entry in the general ledger for 523.67 to offset the outstanding amount. So you have to wait for them to show up for the next reconciliation. Correct, you shouldn't do anything. So next. Nice. So we come to conclusion. So reconciliation is the detective work of financial record keeping. It involves comparing source documents with the records to find and fix errors or discrepancies. By carefully analyzing the details, you can uncover inconsistencies or missing information, ensuring accuracy in financial records. Reconciliation is essential for maintaining reliable information and giving your clients peace of mind. And when you become a skilled at reconciliation, you become a valuable resource for your clients, providing them with the accurate and trustworthy financial insights.
Complete na module. Okay, I think we will end up to here for now because it's almost 9 o'clock. And thank you, Ethel. Thank you, Jessica and Anna, for tonight's presentation. And is Chris have something to say first before we will end our
May
session?
tanong lang ako.
Yes po.
Kasi kagabi, di ba, ang discussion natin is financial analysis, the bookkeeper's role. What is reconciliation? Parang hindi natin na daanan.
Yan yun. reconciliation. After kasi, parang overview pa lang kasi yung kagabi. So, reconciliation, so may continuation pa tayo.
Yung
Ay,
ito,
ayan po.
yung what is reconciliation, medyo
Yan yung,
mahaba.
yan yung dinidiscuss natin kanina.
Hindi, bali nasa reconciliation.
What is reconciliation? Meron pa tayo bukas accounts reconciliation. Ay, reconciling accounts.
Hindi, nasa reconciling accounts na nga po tayo ngayon ngayong gabi. Yung what is reconciliation ang parang na-jump siya dun sa reconciling accounts nga.
Pabukas nga po ng ng what is reconciliation.
Ito, what is reconciliation? Pareha siya nung una yung mga unang na-discuss. Tapos parang nalito na ako, nasa iba na yung lumalabas. So sabi ko,
Hindi ko rin kasi
parang nag-jump na sa why is reconcile? Yan, nandyan. Discuss to nung una tapos may quiz
7 to 8.
Nasa ano na tayo yung sa pangatlong module yung natapos natin ngayon. Reconciling accounts. Yun yung na-discuss natin. Yung what is reconciliation, yung...
Lari kasi akong QBO
kasi
kaya...
dalawa kaming nagtanong kung magkaiba ng subtopics yung
Sige, ka pa nga po.
O yan. Yan, hindi natin yan na-discuss. Mahaba pa yan eh. Pero nandun tayo sa pangatlong module na.
Okay, sige.
Na-discuss po yan. Ako po nag-discuss. Bakit na nga kayong pangako sa dahil ang haba.
Ba't parang may iba?
Na-discuss po yan.
Basta may check na, may green na yung ibig sabihin tapos na siya.
Oo nga
Kasi pag hindi pa tapos, makikita mo naka-blue, di ba?
Opo.
Oo, yun. Naka-ano na siya, may check na ibig sabihin, nadaanan na.
Kung titingnan niyo po, may mga nagsabi, yes po, na-skip po natin yung 2.
Ay, hindi ma'am, natapos ko yun hanggang lesson 4. Tapos si Ethel na yung 5.
Kaya sabi ko, saan na kaya kami? Parang
Pwede pa, tawag nito, pwede pa nung account reconciliation, yun sa isa. Kasi ako QBO, kaya hindi ko rin ma-check.
What is reconciliation?
Reconciling accounts.
So, reconciling accounts, okay na
yes
yun.
Po.
Discuss natin yun, natapos.
Sige nga po, pa-open nga po yung reconciling account.
Okay na yun, discuss natin yun.
Tingnan ko lang yung topics niya.
Okay, wait lang. Reconciling accounts ba? Hinabol ko to bali lumipat ako ng module sa pangatlo. Na-skip natin yung conclusion na ako 7.
Sige nga po, yun sa conclusion sa baba po. Patingin po. Ayun. So, yun nga po, no. Nasa reconciling accounts nga tayo.
Nalito nga ako, Miss Chris, kasi alam ko ako magbabasa dito sa reconciling accounts, di ba? Sabi ko, ano pa?
Natapos natin yung pangatlong
sige, okay lang. Balikan na lang natin yung pangalawang module.
Yung sa reconciliation, balik tayo.
Kasi
kasi kanina, sabi ko, nasaan na kaya kami? Bakit na iba ata yung yung subtopic ko.
Actually, nagtaka ka rin ako kasi sabi ko, parang sa akin to naka-assign, pero nalito lang din ako.
Sabi ko, wala akong QBO, si Miss di ko makita kaya si Miss Ana ang
sinusundan ko
share.
yung mga...
Sige, walang problema po.
Balikan na lang natin yon. Yung reconciliation na lang yung balikan natin.
Yung what is
balik tayo, ganyan.
Ano po yung nabasa ko kanina? Hindi ba
reconciling accounts yung kanina. Ito siya, ito. Reconciling accounts.
Sa quiz 6. 5.
Ba't niyo magtanong?
3. 2. Dito ba kayo nag-umpisa? Dito kayo nag-umpisa? Yun nga kasi reconciliation 'to, Pero
Diyan sila nag-umpisa
'di
pero
ba? Pero reconciling accounts na kasi
reconciling
'to,
accounts yan.
hindi 'to reconciliation. So, nagkamali rin ako ng open.
Ay, Ana, ikaw may kasalanan.
Bali nasa third module ang na-open natin tonight. Bukas na lang yung second module.
Oo. Bukas na lang yung second module. Konti lang naman yung second
Oo.
module.
Sige.
Siguro we can finish early and if Team Joel can continue on the module 2, 3, 4. 4 module after that. Kasi konti lang yan eh. What is reconciliation? Hindi ko rin kasi makita yung QBO ko kasi nga 'di ba naka-blanko siya. Kaya sabi ko ikaw na Miss Ana ang mag-share. Kasi
Sabi ko
silang dalawa naman ang
Akala ko
magpe-present,
tuloy
si
nag-e-error
Jessica
yung
saka si Eden.
nag-e-error yung QuickBooks ko. Sabi ko nag-e-error ata to, ba't na iba na ako?
Ako yung error talaga yung QuickBooks ko hanggang ngayon. Ayaw mag-open, naka-blank lang siya.
Sa akin din po wala. Kaya parang hindi prepared. Kasi hindi
Mm-mm.
namin ma-open yung QuickBooks namin.
Nagtaka lang ako. Sabi ko parang yun yung binabase ko kagabi.
Pwede na lang si Ma'am Ana sa group namin meron nakapag-open.
Oo, kaya sabi ko, ikaw na lang Ana ang mag-share kasi hindi ko makita yung sa akin. So, ayun, ang na-share pala niya is reconciling. Well, anyway, may natutunan ba ang lahat?
Sana.
Sana, no? Okay, we'll just go back to na lang. So, what is reconciliation? Doon na lang natin i-explain lahat. So, ayun. And then, Joel will continue to module 5 after. 4 pala. So, I think that's it, guys. It's 3 minutes before 9. Is Chris or Kelly or Andre have something to say? Or we will end this na? Or is there any question? Feel free to message or
I-pass niyo sa akin yung host, Marie Chris.
hindi ako ang hindi ako ang host. Ay, sino bang host? Ako ba?
Sino ba? Ethel, papass na lang sa akin ng host ha bago ko mag-exit. Baka ma-close mo yung Zoom eh. Thank you.
Excuse me, I have a question.
Yes po.
Okay. From what we have discussed earlier, there is no need to correct or to adjust or whatever to show that the reconciling item, but just to wait for the following month. Is it right? Did I get it right?
It's not to wait the following month. To wait that it will show in the bank
transaction will
statement.
show up.
May
Yes.
clearing kasi yan eh. Check
May clear, like for example, in transit yung cheque mo. Sa atin
Yes.
kasi, dati meron tayong service clearing for checks. So, sa atin, as a owner, kung sino nag-issue ng cheque, nakabawas na yan sa atin.
Yes.
Pero sa bangko, hindi pa. So, we
Okay,
just
so,
have to wait na lang kung kailan siya we don't have to do sa books natin kasi naka-record na nga siya sa books natin, di ba?
Yes,
So, we will just
Okay,
have to wait
okay.
kung kailan siya mag-show up sa bank, saka natin i-match or i-reconcile.
Okay, yes, I know.
yan?
Tanong ko lang, is there any bank reconciliation statement in QBO, right? There is.
Yes, there is.
Meron,
Yep.
meron.
Okay. How are reconciling items presented in the bank reconciliation statement in QBO? I just want to know if it is shown in the QBO.
Yes, we will show that once we
bank recon statement itself.
yes po, we will show that once we will finish the theory.
Okay, thank you. Thank you, that's all.
Thank you, Miss Emma.
Okay,
Okay,
thank you.
for clarification on that, itatapos lang muna natin yung lahat ng theories and all and ipapakita din natin sa QBO kung ano itsura niya doon sa QBO. Yes po.
Please, thank
Once
you.
we're done with the reconciliation.
Yes,
I
thank
think
you.
tomorrow we still have time to do that.
Yes.
Apo. Any question, please? Clarification and all before we will end. Wala na siguro So I think that's it for tonight, guys. And thank you so much, everybody who participated and to the hosts. And we will resume na. And to those who want to stay for the tax review, you can do so. And then who wants to leave, that's okay as well. And then if you still have more questions, feel free to message or in the G chat, and we will be glad to answer all your questions po. Okay. Ma'am
Hello.
Shawnee,
I'm so
it's
sorry.
your
I
turn.
don't know how to
Cherry.
add Miss Cherry as the host.
I-click nyo po dun sa participant list.
Yeah, nandito na yung name
Yung
niyo po.
tatlong pindot,
Okay.
yung tatlong dot, wala po
Katabi
ba
ng
dun?
mute.
Opo. Wala po dun.
Tapos,
Wala po po dun na make
ayan,
host.
nakita ko na.
Thank you.
All right. You're the host na, Ma'am Cherry. So,
Recording stopped.
goodbye.
Okay, thank you, Miss Ethel.
Thank
Thank
you.
you.
Thank you
Thank
po,
you po.
everybody.
Nakita nyo na yung ano ko? Naka-share na?
Yes po, kita na po.
Okay, sige.
Ayan, recording. Don't
Nag-record na,
forget.
Cherry?
Not yet.
Recording in progress.
Cherry, hindi ako nakapag-aral.
Recorded na.
Ako din nga, sa ano ko
Nag-aral
nagre-review.
ako.
Ay, may susundan kami, may nag-aaral.
Ayan, sige. O, ako na ulit. 1 to 16. Ano nga ba to? Anong topic to? Ano bang topic to? Hindi ko makita. Sige.
What to
Mr.
15?
Mr. Apple and Miss Melon.
Inheritance.
Oo, inheritance.
Something.
Oo, sige. Purchased a small apartment house at the beginning of 2017 for 400,000, which they held for investment. Each furnished one half of the purchase price, and each has a half interest in the income from the property. They held the apartment in joint tenancy with the right of survivorship. Example, a tenancy in which the interest of the first tenant to die passes to the survivor on the death of the first tenant to die. They depreciated the apartment house at the rate of 10,000 per year. On December 31 to 2024, Mr. Apple died. At the date of Mr. Apple death, the apartment house had an adjusted basis, cost minus depreciation of 320,000 and a fair market value of 550,000. What is Miss Melon's basis as of the date of Mr. Apple's death? A, 500,000, B, 435,000, C, 400,000, and D, 320,000.
Fair market value eh. Ay, hindi pa naman siya nasasayta. Get awesome. Part na